Okay, let's go ahead and get started. My name is Lance Branch, and welcome to today's webinar, financial webinar, Elections Are Over, Now What? I am a LPL financial advisor and LPL registered principal. And let's go ahead and get started. Some of you all were on the webinar last week, 2 weeks ago before the election, and I promised that I would do this basically talking about what happened with the election last week. Give me 1 second. Okay, the agenda for today is we're going to do a preliminary background of what happened last week, the current situation, where we stand today, what you should plan for, and then we'll go into a conclusion and then take any questions and answers that, and I'll try to answer any questions that you might have. Preliminary background, my job is to best advise you with the current government of how the current government is going to look next year and at least for the next 2 years. It's not to be political, and depending on how what administration and what Congress looks like will depend on what kind of advice I give you financially. As it stands today, it looks like we're going to have Joe Biden as the president. He is a Democrat, and there are possible legal challenges that are working their way through either 6 or 7 states right now, and I expect that to work its way through. We're monitoring that. However, right now, as it stands, it looks like Joe Biden is going to be the president. The House will remain in Democrats' hands, the House of Representatives. They did lose seats. They lost six seats on election night, and essentially they lost another seat yesterday. So a total of about 7 seats that they lost, the Democrats lost to the Republicans. The Senate is probable Republican, even though they lost seats, and they have a Georgia runoff coming up, but it's probably going to stay in Republican hands. As it stands right now, it's 50 to 48, and they would need one of the Georgia runoff seats to have Mitch McConnell be the head of the Senate and for the Senate to remain in Republican hands. The current situation where we stand is, and I'm going to go through all of these and basically tell you whether it's positive or negative, but I see a lot of positive, green shoots coming out of what happened last week, no matter where you stand on the political spectrum. Mitch McConnell, it looks like, is going to be the head of the Senate. Again, Joe Biden will be the president. They have a working relationship because they've both been long-term members of the Senate, and that is positive. Biden has a history of reaching across the aisle and making things work. And getting things done. If you remember during the campaign, Joe Biden, criticized some of his other Democrats that were running against him in the primaries, and he basically said, that's not how Washington works. So Joe Biden's been there for 47 years, and he does know how Washington works. So in my opinion, that's a positive. The market hates uncertainty and got clarity, and that is also another positive. I know you do have this, Georgia vote coming up to decide 2 seats, but for the most part, the market's telling us that they got some sort of clarity, and we've seen a big rally since last Tuesday, and that is going to be positive for the markets. The other thing that happened this past Monday is Pfizer came out and said that their vaccine is 90% effective, and you can expect that relatively soon. It is a 2-dose vaccine, but it's 90% effective, which is really, really, really high, and that's something to look forward to because that is positive. Again, what I said in the last seminars, as soon as we get the coronavirus under control, either by a vaccine or other measures, that's going to be positive for the economy. The other thing we have to look forward to is a coronavirus relief package. Something will get passed. Again, if you had a blue wave, you would get in my opinion, another a little bit bigger bill. $6 to $8 trillion is what I had predicted. You're not going to get that. I don't think really you need that, because this is the end of the, we're not at the beginning of the virus, and we did get a package earlier in the year. But something additional will get passed to help the American people and help businesses that are struggling right now. And again, that is a positive. The other thing I will tell you is the Dems are really concerned right now about losing the House in 2022 and 2024 because of what they call, socialists like AOC. And what I will tell you is there are a lot of Democrats that won in what I call purple districts. They're blue and they're red, and they're hanging on. They won, barely, and they're really concerned that they're going to lose seats when quote unquote socialists rear their head in any sort of political situation. And this Spanberger example that I refer to is Abigail Spanberger is a House of Representatives member in Virginia, and she her Zoom call was leaked, and basically she said that she's concerned about losing seats in 2022 and 2024. The other thing that I will tell you is going back here, the most likely outcome election is a Democrat president with a divided Congress. And you can see that, when the government is split with a Democrat president, you're looking at about a 15.9% return on the S&P 500. And again, that is positive. That is not, that is way higher than what you would get, let's say, in cash. What you should plan for. What I will tell you is this. Taxes, in my opinion, are going up, capital gains taxes and income taxes. And I don't think it's going to go up immediately. However, I do think you need to plan for taxes going up. High net worth individuals need to analyze their non-qualified mutual fund holdings because of capital gains issues. Capital gains will cut into your returns. Let me give you an example. If a mutual fund spends off a 20% capital gains in a non-qualified account, right now you're looking at a 15 to 20% capital gains rate. I surmise that is going up. I don't know how high it's going. I don't think it's going to 40%, but it is going to go up. And you really need to plan for that at some point. Again, to further analyze that, non-qualified assets of high net worth individuals need to really be tax managed. Any changes in tax is not likely to take place for some time, but you need time to prepare. Again, I suspect that the Senate stays in Republicans' hands, and that's going to cause some sort of wall to any sort of tax increases that the Democrats want to do. Historically, another thing to look at is historically under a new president, stocks underperformed in the past. However, under Obama and Trump, that has not been the case. So Obama and Trump have been the exceptions, and that's the last two presidents. But you could see, a new president typically in year one is 4.8%, but under Obama and Trump, under Trump it was 23%, and under Obama it was around that. It was 20% under Trump and 23% under Obama in their first year. So it's, again, that's another positive that we have to look forward to. You have a Fed that's very that has basically said that they're going to have easy money policy for the foreseeable future and low rates for the foreseeable future. So that's something to look forward to, and it's a positive, for the markets. In conclusion, to start this, for non-qualified money, certain people need to sell appreciated assets and need to actually look at possibly selling appreciated assets. I give the example of people who bought Apple stock and invested $10,000 and it's worth $250,000 right now, just as an example. You know what your capital gains rate is going to be right now. After January 1st or in the future, you do not know what the capital gains rate is going to be. I know it's not going to be lower. I think that it's probably going to be higher. So why not lock in gains, pay the taxes, and move on, to diversify your assets. Again, long-term capital gains is 15 to 20%. Now, after 2020, who knows what it's going to be. Again, what we had talked about in the previous seminar is no more than 20% of liquid net worth in one stock. Staying too long in a stock is typically not a good situation. You don't want to have all your eggs in one basket. And I could tell you in my career, the amount of disasters that I've seen where people hold too much in one stock, Enron as an example, and they see that stock go down and it absolutely kills them financially. Mutual fund capital gains issues for non-qualified money is key, in my opinion. It's going to be something that a lot of people have not paid attention to in the past, and they're going to need to pay attention to in the future. Non-qualified money, let me go into this, is anything that's not in an IRA or retirement plan. So we're not talking about money that's in 401ks, in IRAs and Roth IRAs, but any money that's just in a regular account. The other thing to pay attention to is Roth conversions possible between now and the end of the year. I've been running into a lot of people and talking to a lot of people that have no income, no unemployment, no stimulus. So they basically are showing, really low income for this year. To do a partial Roth conversion, I'm not saying that that is the right thing to do, but it's something that they need to look at. Because when they Roth convert, you're going to pay taxes now, and sometimes they're not showing a whole lot of income, but essentially they'll pay taxes now on that money, but that money is going to grow tax-free until they take it out. And when they take it out, it's going to be tax-free. So it's going to grow tax-free, and you're going to be able to withdraw it tax-free. Conclusion expanded. What I'd like to talk is, with regard to market cycles, we're nowhere near the end of a market cycle. A market cycle top, which would mean the market would be at a top, would be the Fed raising rates or at the end of a Fed hike and rate cycle. And that, again, the Fed has said that they're on hold at least for the next 3 to 5 years. At least that's what I've read last week. And that's signifying easy money, low rates. And so, people ask me all the time, do you think the market's high right now? And my answer is the market's going to be high, signify a top when the Fed would raise rates and be at the end of a rate hiking cycle. The other thing is, I will tell you, is the Dem social agenda took a big hit under the Trump administration. So I don't think they're in a big hurry to collapse the economy and lose in 2022. The other thing to look out for is energy transformation. You have a big transfer of some of these energy companies that want to go to no or low carbon, and that's also something to look forward to. That's going to affect the economy in a positive and in a negative way. But again, people are asking to invest in low carbon and no carbon because it's cleaner, so on and so forth. My analysis will tell, in my opinion, could be like a Bill Clinton type of market. If you remember when Bill Clinton was president, we had a tech boom, and the market went up, and he worked with the Republican Congress. So at least at some point in this administration, Biden administration, you could have a pretty good market because the basic facts is Biden has reached across the aisle in the past, and could be like a Bill Clinton type of market, and that's something to look out for. My last point is tech should do really well in this type of environment. It will have its ups and downs. I know some people on this call have made a lot of money in tech, but the trend should be up because we're in what I talked about in last seminar. You're in sort of a tech boom right now. So it seems like we're going to have some next big product that's going to change the market and change the economy. And my feeling is that's going to be in transportation and energy, but that's, again, my opinion. One of the things that we didn't talk about last seminar is contact us for a free, no obligation financial plan. We guarantee you 3 meetings and a financial plan at no cost, no obligation to you. We meet you and identify your goals. We assess your financial situation and risk tolerance. We develop and present a fully custom 360-degree financial plan. If you decide to hire us, we will proceed with implementing your plan once you are ready. If you choose not to hire us, you're free to keep the plan. And again, I put my my email and my cell phone number. If you have any questions, you can email me or text me, and I'll get back to you as soon as possible. Let's go ahead and take some questions from the audience. And give me 1 second, Q&A. Okay, so when did the Trump tax cuts expire, and can Biden increase taxes before that? Biden could possibly increase taxes if he got the Senate. The problem is that even if he were to win even if the Democrats were to win the Senate, they would have a very, very, very slim majority. And there are senators out there. The Senate isn't like the House of Representatives where they're all in lockstep. So there are senators out there that could upset that. But yeah, he could increase taxes before the Trump tax cuts expire. The Trump tax cuts expire in 2025. And that is what we have to look forward to. Let's go ahead and take any more questions. I got a question about selling appreciated stock, and that is something that you need to work with your tax professional and a financial advisor, because that's, again, going back to this, I know what the capital gains tax rates are right now. I don't know what they're going to be. My feeling is that they're going to be up. And that's something that you really want to work with a financial advisor with between now and the end of the year, because that's, okay. Anonymous attendee, how do you think the market will react if election results aren't certified and Congress has to pick a president? If Congress has to pick a president, the market's not going to react, in my opinion, in a bad way. The problem is going to be the market likes certainty, and so it could go down. However, you got to realize there is a set process that we go through. So I want to say it's by December 6th, this election has to be certified. If enough states have not certified their election, then Congress picks a president, and you need to actually go on Google and read the rules about how that happens, because it's not what you think. It could be, it could mean more uncertainty, and that you need to be cognizant of. Again, you can email me or call me with regard to that, and I can talk with you more about that at another time. And any more questions that you have, and if not, we'll go ahead and end the seminar, and we'll take it from there. Thank you so much. Hold on.